Good morning and welcome to NYSE TV Live. I'm Kristen Scholler. Well, the bull market officially turned 2 over the weekend, and to mark the milestone, stocks finished Friday at record highs. In fact, the S&P 500 ended last week up 63% from its October 2022 closing low. Now, this morning, stock futures are pointing to a really flattish open as we start what will be a busy week on Wall Street. The bond market is closed today for Columbus Day, but equities are still trading. Of course, earnings, the election, and this holiday shopping season are coming into sharper focus, and we'll cover it all today on the show. Plus, Markets Media Group set to celebrate the opening bell as its Markets Choice Awards for Women in Finance will be featured. And with that backdrop, let's take a closer look at what we have in store over this hour. Well, with results from corporate America coming in, I'll speak to market expert and valued member of the NYSE community, Jay Woods, about why this earnings season matters. We covered Hurricane Milton extensively last week through data from NYSE's parent company, Intercontinental Exchange. And as that storm barreled across Florida, leaving millions without power and sparking more than 100 tornado warnings, it's reshaped the final weeks of campaigning before the presidential election. Well, Intercontinental Exchange's Courtney Dunn is going to join us with more. And you might have noticed a bevy of fall shopping deals this past week. They come ahead of the holiday shopping season, which is already on some Americans' minds. The so-called crazy coupon lady is going to give us all the ways to be smart and save heading into the holidays. But first, after the Dow added 400 points Friday and the S&P 500 closed above 5,800 for the first time, the bull market seems strong. And joining me now with more is Jay Woods. He's a chief global strategist at Freedom Capital Markets. Jay, always a pleasure to have you.
Yeah.
A 2-year-old bull market.
Yeah.
Can it continue?
Of course it can continue. People are just realizing we're in a bull market now at year 2. And you have to put this in perspective. When a bull market begins, it's backdated. So a lot of people are like, well, how did the bull market begin October 12th of 2022 when the market was in disarray, the Fed was raising rates? Well, that was the low. And then we rallied 20% from that low. By December of 2022, that bull market was officially born. But when did it start? Back in October 22 at the low. And then since then, we went, well, this is probably just a bear market rally, and no one believed it. Heading into 2023, recession was imminent.
Yes.
It's only 7 stocks leading us back. And then when we kicked off this year, we were back to where we started in 2022 and broke out. And now this bull market, it's got legs. So you say it's only 2 years old. The question was, can it continue? Oh, I think it's just really starting to kick into gear, and I like what we're seeing.
I want to talk more about that because so much of what we know moves the markets, not just now, but really over history, is interest rates and the Fed's action on rate policy. And I think to your point, some market watchers, even investors, right, have been surprised by this bull market, considering that it's up 63% on its 2-year birthday at a time when the Fed has only started cutting rates. What does that portend for any sort of money on the sidelines?
Yeah, well, money on the sidelines is going to have to chase performance. That's what that means, and that's why I think the fourth quarter is going to be really strong. It's the strongest quarter of the year every year, and this year, if people have been missing out on this rally, they have to put money to work, and they have to get into this market. So I think you're going to see these people that have missed out trying to get back in, and that's a great thing. And then we're talking earnings growth. So rates are finally coming down. At least at worst, they're stabilizing. There is no imminent recession on the horizon. There are some economists that may say, oh no, this is recessionary and we could be in recessionary soon. I don't see that. And when they cut rates, the Fed cuts rates in a non-recessionary time, the returns are phenomenal. So I think the setup for that part of the bull market to continue is there. And then bull markets, we're at 2 years. The average bull market lasts 5.5 years. And how does a bull market end? We get a 20% correction from the S&P 500 from its peak. So I don't see that happening, barring a black swan, a COVID-like event. And I'm not here to predict any of those things, that's for sure.
I would say let's not add those bad vibes, add that energy, Jay, to the market on this Monday morning. But one of the reasons that it's going to be very busy this week on Wall Street is because of earnings season. And we had seen GDP growth a solid 3% in the third quarter. This reporting season for corporate America covers the third quarter. What are your expectations?
Well, we got off to a good start. JP Morgan kicked this off on Friday, and a lot of people were worried, especially JP Morgan. Jamie Dimon, their CEO, likes to always issue warnings about what he's concerned about. It was a rather upbeat conference call. Wells Fargo, people were worried about net interest income margins shrinking because rates were lowering, but their fees went up. They expect M&A activity to increase. So this week, we're slow today because everyone else we're the only people working. Do you realize that? The bond market is closed.
Our friends down there.
We're here, but the bond market's closed. The banks are closed, but the regional banks and some of the big banks do report this week. So that's where our attention is focused, because if the financials can continue to lead, and technically as a technician, I'm seeing breakouts. I'm seeing extensions of bull market rallies in the leaders. This is very positive. And then you have some bellwethers like UNH. People don't realize United Healthcare is the most important stock in the Dow. Why is it the most important? Because it's a price-weighted index, and it's the most heavily it's the highest priced stock in that index. So when that moves, it will move the Dow. And then Boeing, we're watching because they had a pre-announcement on Friday, and that trades right down there. So we'll see a crowd there in the morning. There are a lot to focus on, but it is all earnings, as you said.
Yeah. Are we starting to see bifurcation in the stock market? We had seen during this bull market during the first few years, technology really lead the way. Finally, amid lower rates, are we seeing other stocks catch up?
Oh, we're seeing a lot of sectors join this party. In fact, technology is far from the leader. So, the technology came a little too soon, and now they're resting over in the corner of this party. But when you see financials lead, utilities lead, industrials start to, go to the forefront, that's broadening out, and that's rotation. And rotation is the lifeblood of a bull market. And this being 2 years of a bull market, to see these other sectors start to lead is great. And here's a fun fact for you, because I know you like them. If you look at the 11 S&P select sectors, in 2024, all 11 are up, and they're up by an average of 10%. Even energy, which has lagged, is up 10% year to date. So that's broad participation, and that's a pretty good party you want to be at.
All right, we're going to keep the party going here on the floor of the Stock Exchange. Jay Woods, Chief Global Strategist at Freedom Capital Markets. Thank you for joining. We'll find Jay, of course, after the opening bell, 9:30 a.m. Eastern, down there on the floor. But the upcoming presidential election is not the only storyline weighing on investors' minds. Of course, many Americans focusing on this as we are just about 3 weeks away from voting day. My colleague Trinity Chavez joins me now with more. Good morning, Trinity.
Good morning, Kristen. That's right. So Vice President Harris and former President Donald Trump are on the campaign trail, hitting key battleground states. With the election just over 3 weeks away, new fundamental questions are being raised. To dive deeper into this topic, I am joined now by Courtney Dunn. She is a Senior Director of Government Affairs here at ICE. Good morning, Courtney.
Good morning, Trinity. Thank you for having me.
It's great to have you. So how do you see the election results of 2024 really affect the balance of power in Congress, particularly in terms of who might take over key leadership positions?
Sure, thank you. So we're 3 weeks out, 22 days to be exact, but who's counting, from the election. And not only will the next president of the United States determine what priorities and policy issues they are top of mind for them, but there will be several impacts of the election on the rest of DC as well. Most notably, the control of the Senate could also be determined by this election. Right now it's Democratic controlled. There's a possibility that it could flip to Republican, it could stay Democratic, but you can easily see how there would be an interesting interplay in both Congress and the White House if there was a split and the White House became one party and the Senate became another. Add on to that the House. So the House has several very tight contested elections across the country, and the control of the House will also have a significant impact on the ability of Congress and the White House to achieve the objectives that they're interested in achieving. And lastly, I'd also like to mention that the impact of the election really stretches far across DC. This will also impact the banking and regulatory agencies, because several heads of the agencies may find themselves in a different party than the new president, and therefore subject to being removed. Now, there's different rules and procedures for each agency head, but that's certainly something to watch as well, as there have been very significant regulatory agency priorities and rulemakings that are still floating around here at the end of the year.
And following Hurricane Helene and Hurricane Milton, new questions are also surfacing about which candidate is best equipped to lead the country through deadly natural disasters. From your vantage point, how has the focus of the 2024 election campaigns shifted, if any, especially in regions that are most affected by these storms?
Right. The hurricanes have undoubtedly had a significant impact, obviously, on both of these regions. But it's raised interesting questions, in particular, not only about the federal government, how it handles natural disasters, but I'd also like to note this brings out another political interplay between the federal and the state government. So for sure, there have been debates and questions, and will continue to be, about whether or not the Speaker of the House brings back its members to vote on any additional spend. It is expected that the White House will ask for additional funding for as a result of the hurricanes. But there's also questions being reviewed again in light of these disasters of how the states handle them. I mean, in North Carolina, they've actually had to address how their voters can vote in elections, particularly in the regions that were really heavily impacted by the hurricanes. So these are basics, access to your right to vote questions that are essential for so many Americans. There's also questions about insurance. This has been a particularly hot topic across the United States, but certainly in Florida, and much of insurance is actually regulated at the state level. So there's raised questions about how the federal and state governments are working together to try to help their citizens get back on their feet and rebuild. And lastly, I would just note that the National Flood Insurance Program is also scheduled to be reauthorized by the end of this year. So lots of questions, and certainly no lack of topics for Congress to debate in the next few weeks.
And there's a lot to look out for over the next few weeks, Courtney. And it was great to have you joining us today. I'm sure we will be speaking to you more on the show. Now I'm going to send things back over to my colleague Kristen in Studio One.
Trinity, thanks for that. Of course, we will be covering the upcoming election and how it's impacting markets regularly over these next few weeks. Of course, we know the stock market usually does perform well during election years, and that is certainly the case this year. Well, after the break, I'm going to speak with the managing partner of a firm that is giving investors exposure to companies led by female CEOs. Stay with us.
Peter, now tell me, what service does Spire provide, and what's your ultimate mission in space?
Spire was founded 13 years ago with a mission to leverage data from space to improve life on Earth. So we have a massive satellite constellation, the 4th largest in the world, to collect data about all sorts of human and nature's activity and provide it as a subscription to customers, over 700 all across the world.
Now, McKinsey recently said if you don't have a space strategy, you need one. So tell me, what are your thoughts about that statement, and do you think McKinsey is correct?
I do think McKinsey is correct, and they placed an analog to what they said in the 90s about internet strategy, because they recognize that there is an exponential technology that is driving the improvements of the capabilities. Back then it was computers and the internet, and today is space. So I do believe that they are correct. And space is already used every single day by more people than they know of, but that is going to dramatically increase in the future.
Peter, can you talk about the technology behind Spire satellites that can deliver these solutions to its customers?
There are 3 types of spacecraft or satellites. There are those that look, they basically take reflections from the sunlight. There are those that talk, they're basically transporting data from one spot on Earth via space to another spot. And then there are those that are listening. And that is what Spire does. We use radio frequencies to observe the weather, ships, planes, soil moisture, wind speeds, all sorts of information. And then we analyze it and deliver it to our customers as a subscription.
Now, Spire provides what it calls a space as a service. Elaborate on what this is and who are your customers?
So when you think back to Amazon back in the days, they were selling books and other products, but then they had to develop.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. Well, today's opening bell celebrates women in the financial sector. Markets Media Group will present its 10th annual U.S. Women in Finance Awards in November. And since its inception as a luncheon and event in 2015, the WIF Awards have expanded to a formal evening program with more and different awards each year. The winners are determined by the editorial staffs of Markets Media and Traders Magazine, and there were 30 Women in Finance Awards presented last year. Well, staying with the theme of today's opening bell, the Hypatia Women's CEO ETF invests in publicly traded companies that have female chief executive officers. The firm, Hypatia Capital, is an asset management company built on investing in women in leadership. And some of the biggest holdings of the ETF, which trades here on the NYSE ARCA, does include NYSE-listed companies like Citigroup, run by Jane Fraser, and Progressive. Well, joining me now is Patricia Lizarraga, managing partner at Hypatia Capital. Patricia, thank you so much for joining all the way from Geneva this morning. We appreciate it. And as we await this opening bell here on Wall Street, that of course does highlight women in finance, tell me more about the purpose of Hypatia Capital's WCEO ETF.
Great. Well, Kirsten, thank you so much for having me, and congratulations on this new live programming in the New York Stock Exchange, which we love and trade on. And so basically, the idea behind the WCEO ETF is our investment thesis is that women CEOs will outperform. Why will they outperform? It's just harder for them to get there. That's why there's less than 10% of them, leading companies in the United States. So we wanted to create a fund that would deliver this female performance to investors, and not just big investors, but all investors. And that's why we chose to list an ETF on the New York Stock Exchange.
Well, unfortunately, just about 30 or 6% of the S&P 500 companies actually have a female CEO. So it seems like there is opportunity here. How does that impact how this particular ETF trades?
So first of all, we do have a minimum market cap of $500 million of market cap so that the ETF trades very liquidly. Because as you know, the liquidity of an ETF has to do with its underlying securities. So the fact is, we have 140 companies that are led by women CEOs that have $500 million market caps in the United States. And we're invested in all 140 of them, making it a diversified portfolio, both by industry and by size, with liquidity that the ETF wrapper provides.
And in taking stock of the data here, Patricia, how do you find that companies led by female CEOs perform?
So our investment thesis is that they will outperform, and obviously past results are no indication of future results. But in the 18 months that we have been trading, we are basically proving out our theory. So the WCEO ETF, because it's equally weighted and our median market cap is $2 billion, its comps are the small cap ETFs. And both for the year and the LTM figures, we are outperforming the three largest U.S. small cap blend ETFs in the United States.
Mm-hmm. What's it going to take to get more female CEOs of publicly traded companies?
So I think there's many issues involved, but one of them is pattern matching, and that's another reason why we launched the ETF. The impact of the WCEO ETF is, one, to highlight those 140 women CEOs that we do have in the United States compared to the over 2,000 men. And second is to highlight their performance. So as boards decide on who their next CEO will be, what we want to do is de-risk the female candidates by making boards aware that women CEOs actually do outperform, and two, giving visibility to those superstars that exist today.
How often do you rebalance this ETF, Patricia, to reflect the current leadership landscape?
We rebalance monthly. And every month we sell those companies that no longer have a female CEO, and we buy the companies that now have a female CEO.
And in terms of the message that you want our viewers to walk away with today, of course, as we wait to see women highlighted on the opening bell podium, what would you say it is?
So what I would say is invest in women. We're launching a campaign, hashtag 100 shares for women. Obviously, as an independent ETF, the hardest hurdle that we have to cross is distribution. We're in a chicken and the egg situation. So until we get to a certain size, we can't be on the normal private wealth platforms in the United States. But each individual can just go onto a supermarket and buy those 100 shares, showing their belief in our investment thesis that women will outperform and should be highlighted, and their portfolios should be thanking them for it.
Patricia, thank you so much for joining. Patricia Lizarraga, Managing Partner at Hypatia Capital, joining us again from Geneva this morning. We appreciate it.
Thank you.
Well, we are just 10 minutes away from the opening bell, roughly. So stay with us. We'll have more NYSE TV Live on the other side of the break.
Elastic is an AI-powered search company. So Elastic sits at a very interesting point in the market right now. We sit at kind of the nexus of cybersecurity, data, and artificial intelligence. Cybersecurity has really morphed into a data problem. So now we're a leading provider of threat analytics and cybersecurity. And then in addition to that, everything that's happening right now with generative AI requires a search platform to be able to feed the generative AI model. So we're doing a lot with artificial intelligence.
Tell me how the integration of AI into your business model has really shifted your priorities.
We've recently announced an AI integration capability with our cybersecurity platform that you can put in your unique capabilities in your enterprise or in your agency to identify new threats that are coming in and prioritize threats based on your unique environment.
What would you say sets you apart from your competitors?
The way that Elastic works, we have this capability called data mesh or cross-cluster search, which allows you to embed small Elastic clusters in all of these different environments, whether it's in multiple clouds or on-prem, and just bring back the results that are relevant to a centralized location. Because of our open source roots, everything is open standard. So it integrates, our technology integrates very well with our existing government environments, and we can run it at a very large scale.
How is Elastic navigating through today's cybersecurity challenges in today's economic landscape?
Elastic allows you to search this tremendous amount of data coming in, and now integrating some of these AI tools allows you to find the threats that are most relevant to your environment and remediate those threats quickly and take a lot of that burden off of the security operator. The integration of AI into the security tools is going to help us continue to stay ahead of the bad actors and the emerging threat.
How do you ensure data privacy to your customers?
We have a vector search database that is required to use for generative AI and large language models. So they require a vector search platform. Essentially, we can organize unstructured data to be able to search that data very quickly and provide the relevant information that our customers are looking for. You also want to be able to provide some security controls in terms of role-based access control or even field-level security control in the data.
Welcome back to NYSE TV Live, everyone. We, of course, are following closely here everything that happens in the technology space. And Dataiku's AI and machine learning platform does help organizations prepare, analyze, and visualize data to make better business decisions. The president spoke to NYSE TV's Judy Shaw about why artificial intelligence is critical for companies and how Dataiku helps manage the balance between excitement and concern for AI.
Dataiku, if I want to sum it up with one word, is we actually bring everyday AI to the enterprise. So what does that really mean? If you think about AI, and especially on the enterprise side, we want to actually bring AI to every individual and in the enterprise. So it means all the way from the business user to the data scientist to the data engineer, all within one universal AI platform, which we actually have built. And Dataiku is a company that's been in existence for over 10 years. So we've actually seen this, and we've been in the forefront of data and AI. And we've been able to really help customers. We have over 700 customers now, over 10% of the global 3,000 are customers. So we have actually seen how to execute AI in very complex environments and complex enterprises worldwide. And so I'm really excited where Dataiku is today.
Now, Krish, tell me, from your point of view, why is AI so critical for companies?
AI and generative AI is in this very, very interesting moment where, yes, the technology is evolving at rapid pace. And you have a lot of executives saying, I'll just wait and see. Let's see how this whole vendor ecosystem works, the whole ecosystem of technology works, and then I'll try to invest in AI. But unfortunately, that's going to be too late, right? So, as I said, I've been here, I've seen this floor in the last 10, 20 years, and there's so many companies that waited for the internet to evolve, waited for the cloud migration to evolve, and they missed the boat. And they don't exist anymore. And AI and generative AI is in the same spot. If those companies do not take the initiative today, they won't be in existence a year or 2 years from now. Forget 10 years from now.
Now, there seems to be equal parts excitement and concern about AI. How do you help companies manage this balance?
If you're an executive, right, and I look around, I was part of a lot of the investments that actually went on this floor. And the first thing an executive thinks is, hey, is this vendor I'm going to pick has seen this, has done in scale, understands the complexity of compliance, regulation, and actually builds technology that can evolve at a rapid pace, but at the same time safeguard their data and make sure they are actually compliant. These are hard things for execs to think about, especially in a very global, complex environment. And that's where Data IQ really helps, because we have built the universal technology platform that actually helps not only build the level of trust that companies actually need, but more importantly, they tackle the areas of governance and cost management, which are also very critical parts of any decision that an executive actually makes to bring trust into AI. So I think that's the way we can actually bring AI and trust together, because that's what's going to accelerate the US economy.
Now, Krish, tell me, what's next for Data IQ?
So for me and the executive team, the most important thing is to drive this innovation strategy, right? Unlike other technologies in the past that took maybe 3 months or 6 months to evolve, AI changes almost every day. So we have to be way ahead of the curve in terms of innovation agenda. I think the second key thing for me is we have to bring scale and maturity in our organization. That's where we are right now. We already have built that scale. We are in almost all the key global areas in the world, marquee clients throughout the world. But at the same time, we are building that level of maturity in the organization. And we have been very fortunate because our two founders who are with us, our CEO as well as CTO, always had the vision to say, hey, it's not only important to build great technology, but you have to know how to scale and serve your customers globally. So that's actually one of the most critical things that I'm working on, is to build that level of capability in each of our organization and its components to hopefully one day, be here, right? Which will be exciting for me. So that's where we are in the journey.
Now, thanks to Judy Shaw for that interview, and stay with us. We will have the opening bell just moments away here on Wall Street.
Welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with Savina Rizova. She is co-CIO and Global Head of Research at Dimensional. Thank you for stopping by.
It's a pleasure.
So we understand you've launched this new UMA service for your advisors. Could you tell us a little bit about it and what the benefits are?
Absolutely. These days, advisors want to both scale and customize. They can customize with SMAs. They can scale with managed models. A UMA gives them the opportunity to both.
So one of the things that's interesting is there's a lot of conversation in our world about ETFs, direct indexing, UMAs, SMAs. How do we sort of distinguish between all of that?
Absolutely. SMAs are typically portfolios of individual securities, stocks or bonds that you hold in one account. Direct indexing is a subset of SMA, which just starts with an index, and then you customize off of that. Our SMAs do not start with an index. They start with a dimensional defined starting strategy. But SMAs generally are used for customizing for specific client needs, tax needs, or ESG preferences. Managed models are models typically of ETFs or mutual funds that allow advisors to scale by assigning many different clients with similar needs to the same custom model they developed. On our UMA platform now, they can do that. They can assign multiple clients to the same asset allocation they put in on the platform, and this allows them to have like a very consistent investment experience offered to different clients.
Are there key benefits? How does this help a Dimensional advisor?
Oh, it helps them to gain operational efficiency because they can actually outsource the day-to-day asset allocation, taxes, and a cash flow management to Dimensional, and they can also have Dimensional data.
right, we're off to the races. Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler, down here on the floor of the stock exchange. And as we have a mixed to flattish open to start what will be a busy week, I'm joined again by Jay Woods, who's a chief global strategist at Freedom Capital Markets. Jay, great to have you. And as we see what is a muted open, does the bond market being closed for Columbus Day impact what we'll see here on the floor at all today?
Oh, it'll impact volumes. It's going to be slow, but what we're watching now, we're opening at all-time new highs in the S&P 500, but as you say, it's mixed. The Dow is down. That's thanks in part to Boeing being weak. But overall, it should be a slow, steady day. Barring any news events, I don't expect much to happen, but the table's set for later in the week with earnings, as we talked about earlier.
The past few weeks, though, we've seen a variety of both storms and strikes, right? Across different companies, a variety of storms impact the country. Do you expect that that might take a toll here on growth and thus the stock market?
Well, the storms are something we can't control, but the market has been very resilient. When these news events happen, the port strike, the two different storms that struck the southeast, we saw pockets of volatility. The market did sell off, but, we continue to chug along. The port strike didn't have lasting ramifications, so Christmas is saved for now, thankfully. But, right now, no, it's going to be all about earnings and earnings growth, and if we see that, then I suspect this rally, as boring as it may be, will continue higher.
I'm curious, too. We had seen Hurricane Milton really reshape campaigning here in the final few weeks of the election in terms of seasonal trends here. How do we typically find that seasonal trends around the election impact stocks?
Well, seasonality with election is always a big thing. In 2016, energy stocks were in play, whether it was oil or whether it was solar. We're seeing a little of that this time, but this is a 50-50 toss-up right now based on the latest polling numbers. So we're going to watch those headlines very closely, and we talk about 7 stocks driving this market. Well, there's 6 states driving the political races, so we're going to be watching those 6 states closely to see if anything comes of it. But right now, there isn't one factor that's being driven by either party as they take and then lose the leads from the poll numbers.
I want to focus on one specific stock, and that's Tesla. It dropped almost 9% on Friday after a disappointing robo-taxi unveil. Once was a major mover in the market, could impact the broader market indexes. Is that still the case?
Well, that was a big event that was hyped for almost a decade. We were waiting for this, self-driving car. I mean, like I've said before, I thought we'd be in Jetson's age and I'd be driven to work every single day. So there was a lot of hype whenever Musk has a big event like that. And unfortunately, this supposed Uber killer in the cybercab, the robotaxi, really didn't give us much in as far as firm timetables as when the rollout was going to be. It's still a great idea, great vision, as Elon Musk is an amazing visionary. He will eventually deliver, but what people want to see is they don't want to buy the hype, they want to see results, and that's why that stock has lagged. And it did run up 35% into the announcement, and 9% sell-off. Understandable, but watch. Shares of Uber, which trades right over here, up 11% just last week alone.
Interesting. So even though we have a bit of a muted market open today, again, stocks coming off record highs, there's a lot of resilience, positive investor sentiment, certainly tailwinds out there as well. I want to talk about the IPO market briefly here, Jay, because we have seen several companies go public in the past few weeks, including Standard Aero, and that IPO stuck out to me in particular down here on the floor because it was the first billion-dollar company to price above its range since the 2021 IPO boom. We had seen many companies tap the capital markets back in 2021 when we were flying high. Is this a positive sign?
Oh, I think this is a great sign, and the stock continues to do well. It priced above its range, traded above that range on day one. So to see a big company like that come to markets when people are kind of waiting for the election to be over, for a while they were worried about, maybe this was just a bear market rally. It's not time to test the public markets. Our president here, Lynn Martin, has said that the pipeline is very robust and they expect things to pick up as we get through the end of the year, first quarter of 2025. I believe that to be true just from Freedom Capital Markets, some of the smaller companies that have talked to us. There's a lot of demand, but people want to get through this election cycle. And I think once we kick off 2025, we're going to see some big IPOs come to market. What they are, I don't know.
Jay, in just about 20 seconds, we talked about it earlier, but top stocks you're watching this week as it pertains to earnings.
All right, we're watching UNH because it's the biggest weighted stock in the Dow. We're watching all the financials, Goldman Sachs, my former employer, Morgan Stanley, and then a lot of the regional banks. The regional banks still have yet to really recover from the crisis back in March of 2023. They're just getting back there. I think this could be the time for regionals to shine.
Okay, Jay Woods, Chief Global Strategist at Freedom Capital Markets. Jay, always a pleasure. Thank you. Yep. All right, well, let's take a live look down here on the floor of the stock exchange. Of course, we're just about, I would say 6 minutes into the open. And of course, all of this comes as earnings season gets underway in full force. Third quarter reporting season taking place during this fourth quarter. Of course, we have people here celebrating the opening bell this morning. All for Women in Finance, a media group acknowledging women in finance. And I had the chance to speak to someone who runs a female-led ETF earlier. Let's check in with my colleague, Trinity Chavez, with more.
Thanks, Kristen. Yeah, so Markets Media just rang the opening bell in honor of its 10th anniversary of its Markets Choice Awards for Women in Finance. Megan Fitzpatrick, she is the Executive Director and Head of Global Marketing at global finance securities platform Instanet. Megan, it's great to have you here. I mean, we're up there ringing the opening bell, seeing your colleagues, your friends, supporting this huge initiative. Talk to me about the significance of being here at the New York Stock Exchange.
It's absolutely wonderful to be here. It's wonderful to celebrate with all these wonderful women here and their daughters. Finance has come such a long way in 10 years. We really are amplifying women in the industry, so it's wonderful.
Yeah, and according to reports, roughly 20% of women hold executive positions right now in the financial sector, but that number is continuously growing with initiatives like this, honoring these awards. Talk to me about the role that you play and how much you've seen the industry transition.
Yeah, so I've been in the industry and I've seen a transition exponentially. You just see it when you see somebody that looks like you in the role that you want to be in, you're more likely to take that job. And so really we're just trying to empower young women and empower young female professionals to come join the financial industry where, it's really a growing and great place to be.
And let's talk more about the Markets Choice Awards. That's coming up November 21st. Talk to me about everything that went into planning this event and everything that was considered for these awards, who's going to be receiving them, and your work with this organization.
Yeah, so we partner with Markets Media, who have been such a leader in promoting women in finance, and it's been fantastic because we help support that with our Instanet Positive Impact Award. That Positive Impact Award goes to a woman in finance who is really being a leader not only in the industry but also in her community, whether it's a philanthropic program, giving back, or even just corporate giving. So we really are happy to sponsor that award and really help champion those female leaders in the industry.
You talk to me, and I have to just point out real quick, I see a bunch of little girls on the trading floor just gathering underneath the bell podium. I love that. I love seeing that here. But just quickly, talk to me about the evolution of these awards and the biggest changes that you have seen this year compared to years past.
Yeah, so it's the 10th year. So, when we first started these awards, or actually when Markets Media first started these awards, there wasn't 300 people in the seats. This year, I think they have around 300 for our November 21st. And I say it's Markets Media's November 21st Women in Finance Awards. It's a really spectacular event. It really highlights all of the great work that the women have done in our industry, and it's just expanding. And so to see the young women on the floor and see their eyes light up when they're looking at the screens, it's really fantastic because, as you know, 20% women are on the floor, and we need to have that a little bit more than that. Maybe 80, maybe 50. I don't know.
It just goes to show, especially with the fearless girl just standing right outside this 232-year-old iconic institution, and what the future holds for women across all sectors and leadership roles. Well, thank you so much for joining me. Now we're going to take a closer look at the retail sector just after this quick break. We'll be right back.
So, Madhu, tell me, what are your thoughts on the current market conditions in the AI space, and how is Icera positioned to navigate them?
Very good. It's lots happening in the AI space. You saw recently with NVIDIA, Jensen, the CEO of NVIDIA, making announcement, I think, month of March. And last week we were at ServiceNow event. And today, Microsoft with Satya announcing a lot at Microsoft Build on Copilot. So market is evolving so much in Gen AI space. Every month there's something new. And what at ISRA we really position is we are the chat GPT and AI search for enterprise. So the new thing right now, this 2024 is all about AI referring to enterprise, right? How enterprises can use chat GPT and AI search to do it in a secure way without data leakage, without data being lost, and doing in enterprise data that's behind the firewalls. That's the biggest trend that's happening right now in the AI space.
And what growth have you seen over the last year?
See, for ISRA, we've been very fortunate and we're lucky. So it's thanks to all the customers, partners, and employees. We've been growing more than 100% in last 12 months. We have added so many new customers. We are landing multiple large deals. So we are very fortunate to get customers that starting from companies like Cisco, Workday, Gap. We have customers like Gilead, Amgen. So we get so many new customers adding every year, every quarter. The growth has been fantastic.
Now, GPU usage is skyrocketing, leading to more and more energy use every year. How has Icera helped combat these issues?
So what ISRA has done is we have done a very interesting architecture. We call this one agentic inference architecture. It's a hierarchical agentic architecture in the sense the way in which we do it is we separated the foundation models, domain-specific LLMs, and task models. Our secret sauce is in the domain-specific LLMs in our hierarchical agentic architecture. By doing that, what happens is for every training and in inferencing, we don't need to always go use that much compute and NVIDIA.
Welcome back to NYSE TV Live. I'm Trinity Chavez. And as the holiday season approaches, the shopping frenzy seems to be starting a little earlier than before. Retailers are rolling out deals before consumers have even picked out their Halloween costumes. To break it all down, the early shopping season trends, why retailers are pushing deals so soon, and how you can snag the best bargains without breaking the bank, I am joined now by Joni Demmer. She is the co-founder of the Crazy Coupon Lady. Joni, thanks for joining us.
Thanks so much for having me. My favorite topic.
I know we love shopping, especially during the holiday shopping season. But we're seeing Black Friday basically in October. Promotions are becoming more popular. So why do you think that retailers are pushing holiday deals earlier and earlier each year? And how does this impact consumer behavior?
Well, the facts about why this is happening are sound. Retailers have data that show them for shoppers who begin shopping earlier, they're very likely to spend more before the holidays arrive. And so that's the motivation behind this behavior, is get you shopping earlier and more often. And while that feels a little shady and you're like, okay, great, so is your advice don't shop early? It actually isn't. It's about flipping the script and turning this back on the retailers, because the thing that they're using to lure you into that early shopping are truly, legitimately great deals. And so I think that as a smart shopper, you have to begin shopping early, but you've got to make sure that you're working the system and that you have a plan, whether that's a budget, a spreadsheet, a dedicated closet where you put things when you get them. You've just got to kind of be aware of that psychology that exists. The retailers are banking that you are going to end up spending more. So as long as you go into the plan, I think it's really important. You need to start shopping early. You need to take advantage of these one-off daily deals to really save the most and maximize your money.
Yeah, I know. We just saw how Amazon launched their Prime Day just last week, and then we're seeing consumers like Costco, or actually retailers like Costco, Walmart. I mean, they already have Christmas decorations up in October, so consumers can purchase. But as we head into this year's holiday shopping season, how are both retailers and consumers preparing differently compared to previous years, especially with inflation and economic uncertainty?
Yeah, as far as retailers, right, like they are reading reports that say some consumers are planning to spend less this year. I think we're all going to watch and see what actually happens there. Their reports are saying that consumers are going to comparison shop more this year. Consumers are going to start shopping early, and they're going to rely more on Amazon. So I think retailers, of course, have for years now have had very Amazon-centric competitive strategies, whether that's small stores and offerings in store, or like old school, JCPenney is still giving out the gift cards for when you walk into the brick and mortar. I think everyone's really focused on what they can do to make sure that the comparison shopper still finds their prices good and how they're going to compete with Amazon. As far as shoppers and what shoppers should be doing to prepare, I say on Black Friday that everyone you follow on Instagram becomes a deal expert, right? And I too use influencers to help me get ideas for what I'm shopping for. But I think the peril there is, again, back to the psychology, we've got to be aware of the power of suggestion. And so I think, for sites like the Crazy Coupon Lady, what we do is deals 365 days a year. And so even though that thing that's on your list might be on sale today on pick a day, October 27th, the deal sites are the ones that are going to know, based on historical data, even though that's on sale, are we going to see a better sale before the end of December? And so I would really say, download an app like Crazy Coupon Lady, set deal alerts, get strategic. This is game time. Like iBlack's on, get strategic. There are hundreds of dollars to be saved. That's the difference between people that really plan ahead and those that don't.
But you really bring up a good point on how you need to seize the deal of the day for those one-off deals that are being presented to consumers. But say if you make that purchase, how do you know you're actually getting the best deal if there's still about 2 months left before Christmas?
That's the hard part, right? And I think very few consumers have, a spreadsheet of everything that they have with a perfect plan. So if you're not following a deal site, or even if you are, make sure that you're taking advantage of things like price adjustments. You're continuing to watch, especially if you buy a gaming console or a laptop or something big, make sure you continue to watch the price of that item. Most stores will give you a price adjustment if the price drops again. And even if the store doesn't, it's the holidays. If it's still new in the box, you literally can buy the new deal. Like let's say Amazon drops the price and you got it at Best Buy. Buy it on Amazon today, take it back to Best Buy with the receipt 6 days from now. A little extra legwork, and not going to be worth it on every purchase, but on those big ticket items it might be.
So basically look at the return policies, right? You want to make sure that you get that extended return if you need to exchange it for any reason. But also, what other key strategies do you recommend consumers implement when it comes to making the shopping season, getting the most bang for their buck, in other words?
There's everything. It's a relentless drive for the best deal. It is layering codes. It is looking for extra % off. It's buying in bulk when that makes sense. It's shopping on multiple different days at multiple different places. If your tradition, even if it's on Black Friday, is to go to one retailer and buy everything on your list, that's never going to be the best way to save money. It's about cherry picking from the best deals throughout this season, which, to your point, is now 2 months plus.
A lot of important information right there. Thank you so much for joining us today on the show.
Thank you.
Now I'm going to bring in my colleague, Kristen Scholler, once again on the trading floor. We were talking all things shopping, retail, all the tips and tricks you need during this holiday season.
Have you started your holiday shopping?
I have
Trinity?
to say, actually, no, I haven't. I'm really bad, and I love shopping too, but it's just become so stressful this time of the year. I mean, people haven't even chose their Halloween costume yet or gotten their Halloween candy.
I got to tell you, though, over this past weekend, the past 7 days or so, there have been a lot of fall deals, and I've been trying to take advantage, of course. I feel like unofficially, ever since COVID, the holiday shopping season almost starts on October 1st, especially with Prime Day on Amazon last week as well. And so a lot of deals to be had. The Crazy Coupon Lady gave us, the so-called Crazy Coupon Lady, gave us some good insight there. But I think it's definitely starting to be time to make a list if you don't have one already.
Well, you bring up a good point. Technically, it is kicked off October 1st because you still have to shop for Halloween, right? In fact, did you know that this year, experts are projecting that $11.6 billion is what consumers will spend on Halloween this year. But get this, that's still 5% lower than last year's record number of about $12.2 billion.
Always good to save on candy as well. No doubt about that. Of course, we'll be watching how the holiday shopping season plays out. We usually don't hear from retailers until the end of earnings season. And as we've been covering here on NYSE TV Live, earnings season kicking off in earnest this week with a bunch of banks set to report. But it will be a few weeks closer to that Halloween time that we actually hear from some of those retailers. We're going to take a quick break and we'll be right back on the other side.
Our company is designing the most advanced memory and storage controller chips to help solve the bottlenecks for the data pipeline for the AI and the cloud infra. We are building a platform from the chip design to the firmware, software, all the way to the turnkey modules, and helping customers get qualification and deployment in the data center. That really help us to differentiate from the traditional companies that are facing a lot of efficiency and innovation challenges.
And you recently announced a new SSD controller chip, use of a new ARM Cortex R82 cores. It's a new technology in this space. Tell us exactly what this is, what's unique about it, and about the new technology.
We have been focusing on designing most advanced storage and memory controller chip solutions. These technologies are helping solving the bottlenecks for our data pipeline in the data centers, and it's extremely critical for our future growth. The technology we innovate and we adopt will serve that purpose. For example, the technology we just announced on the advanced error correction coding, that will help really significantly improve the reliability of DRAM tier of high capacity, and also help reduce the server downtime. On the other hand, we also partner with industry leading IP vendors like ARM. Their latest R82 core is the greatest and latest embedded CPU, which is great for our next generation controller chip. And it has super great performance, power consumption, and a variety of new features. So that's how we synergize with best-in-class IP and
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler down here on the floor of the stock exchange. We are off to the races just about 30 minutes in to the trading day, starting what will be a very busy week, especially with earnings in focus. But we had seen the bull market turn two over the weekend. The S&P up more than 60% since its low in October of 2022. And many of our markets guests on this show saying that there are tailwinds behind stocks and risk assets like equities to continue rising from here. In fact, the S&P 500 hitting a new record high today at the open. Well, as part of our focus on retail during today's show, we want to highlight how brands, big and small, are thriving in today's evolving retail landscape. Trinity Chavez spoke with one company about how it is revolutionizing the way that consumers shop.
Fetch is a completely free mobile app that you can use to earn rewards for everyday shopping, playing mobile games, and all kinds of other things. It's all about how do we build up that repeat behavior so that a consumer knows, hey, if I spend money with this brand, I'm going to earn points. That leads to, over time, them shifting their purchases and you actually retaining that consumer as the brand. So it's advertiser dollars that actually go to work on building loyalty.
What was the motivation behind starting Fetch? Tell me about that story.
We became obsessed with this concept of how do you create something that's easier, fun for the consumer, and spans all of the shopping that they're doing so that you can earn something that at the end of the year could pay for all your Christmas presents, as an example. And that was really where we went with it, and dropped out after my sophomore year to start the business.
And Fetch just secured a new round of funding. Tell me about why you went with Morgan Stanley this time.
For us, it was really important this time around that once we hit profitability, that we wanted to continue to be able to invest in those core pillars, the innovation, growing of the consumer base, but we can do so in a way where we don't have to dilute ourselves with raising equity financing. So doing a debt facility with Morgan Stanley was much more appealing to us.
Can you talk to me more about the value proposition for Fetch customers?
For our users, again, totally free and easy for them to download, get real value, have fun while doing it. And then for our partners, the advertisers, they're able to now connect with the right consumer on a one-to-one basis. We always talk about how if you use the platform more and you're using the app every single day, it should get smarter. It should help you earn more points every single week that you're using it. It's because we're utilizing that data not to go and sell it, but to actually make the product better. And the advertisements that you're getting, they are the value of the app. So people come onto the Fetch app to be advertised to because they actually get to be a part of it and share in that value that they're creating in the form of points.
And speaking of value, how do you maintain the company's core values, right, while ensuring privacy, data privacy, cybersecurity is a big issue, while also meeting customer needs and demands?
We find that if you take a long enough time horizon, those intersect actually. Doing the right thing today puts you in a position to be the preferred partner for a lot of our clients for the future. We focused on that because we knew if we are going to have a relationship with the consumer, it has to be built on trust. It's always been at the core of what we do.
What are the biggest trends that you notice that consumers want from Fetch?
People are thinking about how do they get more back for everyday things that they're doing. The little moments that you take throughout the day for yourself, can you get rewarded for those?
My mom's always taking pictures of her receipts to try to earn those reward points because, you know, every penny counts these days.
It really does.
Welcome back, everyone. Trinity joins me now. Of course, Trinity, interesting to see how we're shaping up going into the holidays and how some of these apps really are taking shoppers by storm. What are you following?
I mean, it's becoming extremely popular with apps like Fetch Rewards. We heard earlier from the crazy coupon lady how she even has her own app so you can really get the biggest cash back when making purchases when it comes to everyday items or gift giving. Of course, it's the holiday shopping season. And in fact, Statista estimates that about 60% of consumers in America use cash-saving apps when it comes to their shopping needs. And also another study by NerdWallet in 2023 suggested that over 70 million Americans actively use cashback or discount apps to help save money. I mean, obviously that's at the forefront of many conversations around the world, but who doesn't like to save money when you can, right?
Great, especially this holiday season. And so many of these apps, I feel like, really did become a topic of conversation in American households, especially amid the coronavirus, right? We had seen so many people shopping online more. That was the first trend, then followed by another wave of inflation. Of course, we've seen inflation cool back down. It's closer to the Fed's 2% target, but ways to save. As we know, many Americans were trying just to get by, and that essentials were so expensive.
Yeah.
So no surprise to see that this is a trend that's continuing in the wake of COVID.
Yeah, no, absolutely. And so, you know, it's going to be interesting to see how the holiday shopping season shapes up because, as you said, the trends in the shopping and retail sector really shifted after COVID because everybody turned to online shopping. And regardless of the fact that stores were closed, the traditional brick and mortar stores, we were still seeing record numbers when it came to shopping because people didn't have anything to do. So what did? They turned to their phones, they turned to their internet, they went online and they just started shopping. I remember when everybody was trying to get their workout equipment because they couldn't get to a gym.
Yes.
I know I was one of those people trying to get...
Well, speaking of shopping, we should highlight for our viewers that we've got retail sales data on tap later this week, so that'll give us a good sense as to how the consumer is faring, of course, after back to school season, heading into the holiday shopping period, kind of this in-between window, but also will give us some indication as to where inflation might be heading from here.
Yep.
It's going to do it for today's coverage, everyone. Don't forget to watch us on tv.nysc.com. I'm Kristen Scholler.
And I'm Trinity Chavez. Make sure you tune in to tomorrow's opening bell.
Have a great day.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a